iPhone sales were down 2%. iPad sales were down 20%.
All right, well, Apple shares under pressure today, poised to shed $200 billion in market value in just 2 days.
Apple just took a huge hit in value, down $200 billion in its market capital.
Apple touched a new milestone this June by becoming the first ever company to reach a market value of $3 trillion. It's hard to even imagine a company of this magnitude facing issues, but the line between failure and success is more than often hair-thin. The company recently reported their third consecutive quarter of declining sales to 4.8%, lowering their market cap to $2.85 trillion. With a hefty reputation like that, it's hard to imagine a downfall of Apple, but the recent stock plunge where Apple allegedly lost $200 billion has a lot of people worried about the company, and it's not getting any better as time goes on. Usually after an Apple event, the stock prices get amped up, but this time around, things went south, and this not being the only instance of Apple losing money, one cannot help but ask what happened. What happened to the world-famous technological conglomerate that had a vision to change the world? Why are their finances taking a bump at such a grand scale? Is this a short-term thing, or is this the beginning of Apple's downward spiral? Find all that out and more in our video today.
Are you struggling to explain your idea? Your audience is not getting what you're trying to say. An animated explainer video is a perfect solution for you. Explainer video simplifies any complex ideas through engaging animations, transitions, voiceovers, and meaningful scripts, which all together create a fun experience for any viewer. And here comes 10 Studio, a team of skilled professionals dedicated to creating engaging explainer videos. With over thousands completed projects, we have the expertise to create explainer videos that break down your message and connect with your audience. Get in touch with 10 Studio today.
To categorize it under a technical problem would be a severe understatement, as Apple stock has seen a downsizing of over 6% in the 6th of September, in what's their biggest back-to-back slide in 10 months. Apple has just lost $200 billion in market capitalization since the stock plunge, thanks to Chinese officials reportedly asking their government employees to downright ban the most popular phone in the world. Apple launched their much-anticipated iPhone 15 series in their launch event, where Apple fans were granted an amplified 5x telezoom lens in the Pro variant of their flagship phone, alongside USB-C charging ports, and of course, a couple of color options to express their sense of individuality. However, the technical issues, for the lack of a better word, are not about the phones they make, nor the kind of service they provide, but the company's stock chart itself. One significant reason behind this could be the lack of innovation. I mean, if you compare the current iPhone 15 Pro with 3 generations older iPhone 12 Pro, how much of a difference will you find? And did the upgrade actually make much impact on your regular iPhone usage? Coming back to the stock again, if we look closely, about a month ago, Apple's stock notched a record high. But before they could celebrate, they faced a nasty sell-off with a sonic boom and hit an all-time low. At the time, it appeared that this was only a temporary issue that would see itself solved by the month. At least, that's what their track record was implying. During the second half of August, the stocks did see some form of improvement, but the last 2 days struck the company like a bolt of lightning, nearly erasing all of the gains and leaving the stock that hovered. The question is, why? An educated assumption would be due to Apple's lack of imagination, as they've given their customers a lot less initiative to be excited about their new products, since the competition is bringing forth new products that completely overhaul their predecessors. The Beijing Crackdown has been a subject of interest to a lot of analysts. In a recent note to clients, Ron Adler, the managing director and sell-side tech trader from JP Morgan, mentioned that Apple usually has their stock rallying up before their big events, and then eventually fades into oblivion. Yahoo's take on the matter is that Apple stock sees an uprise during July and August, but tends to see a downfall starting from September. According to the masses of analysts who prefer to be on the optimistic side, October is usually the best month for Apple, but this year might have something else planned entirely. The bump that usually comes during August never came to fruition, And Adler thinks that the stock of Apple is behaving in a very uncharacteristically defensive manner. Not only that, but if you see the stocks, you'll notice it's displaying a counter-cyclical behavior where it's serving itself as a cash source for buyers of other stocks. Yes, one can argue that Apple is up to a commendable 35% this year, but when you compare it to stock returns from Nvidia's 210% or Meta's 150%, the situation becomes a lot darker for Apple. On a grand scale, Apple is currently facing 3 quarters of declining year-over-year growth of revenue, which makes this comparison between Apple and IBM, as surprising as it sounds, a spectacle to witness. According to Bernstein, Apple between 2015 and 2023 has had strikingly similar pre-tax income and earnings per share growth as IBM did between 1997 and 2012. From this, there are 2 takeaways for Apple. First and foremost, revenue growth matters, so it'd be wise for Apple to focus on its top line. Second, strong profit growth is highly unlikely to be Apple's savior this time around, considering the rich multiple that values the stock like a growth company. Apple in general is not having the brightest of times. The stock plummet, financial complications, and not to mention the lack of interest for buyers afterward, the only thing that appears as a savior could be the upcoming event. If what we saw in 2023 continues to persist, investors in Apple might have no other choice but to sell their Apple stock after the iPhone event, and then funnel the money to Meta, Microsoft, and Nvidia. The paradigm shift is real, and it's coming real fast, real soon. Here's to hoping that Apple makes it out of it.